Hey traders, welcome to another crypto market update. We hope that you had a great weekend and are ready for this upcoming trading week. So let's get right into this today's video. We're first going to talk about this new fund that allows you to gain exposure into the cryptocurrency market without actually purchasing cryptocurrencies. And then we'll get into, I guess, the positives and negatives with that. First thing, we can see Canadian asset manager 3iQ has become the first firm to launch a fund tied to Bitcoin on the Toronto Stock Exchange after 3 years of legal wrangling. The ticker symbol is QBTC.U, and the IPO was on April 9th. And also the Winklevoss twins are actually involved. They are acting as a custodian for the Bitcoin fund. And just one thing to note, and just discussing this a little bit more, the main thing that I want to kind of explain is that these funds do have management fee costs. This current one is just under 2%. And in my personal view, if you are investing in the cryptocurrency space, yes, you can purchase equities, but at the end of the day, purchasing Bitcoin or Ethereum or any other asset in the digital space and storing it on your ledger costs absolutely nothing. Yes, this is a managed fund, so they will be able to invest more actively in more speculative, potentially more rewarding investments. But if you are looking to just invest in Bitcoin and Ethereum and some of the large market cap tokens and assets in the digital space, you don't need to pay this management fee. It costs $0 to store all of your assets in a ledger. So just wanted to let you know, these equities do have management fees, which do compound negatively, opposing you. So you see compound interest working for you over time, but this is working against you. And this is a fee, no matter if it's up or down, they will take that 1.95%. Just wanted to let everyone know. All right, now to get into the next news article, Bitcoin Whale numbers hit 2-year high as investors near 2016 halving. Let's dive in here. There is more BTC whales now than any other point in the past 2 years. For anyone who don't know, Wales is a large BTC holder. We call them whales, and that mimics a trend from 2016 halving data shows. In its latest week on-chain report on April 9th, monitoring resource Glassnode revealed that current numbers of major Bitcoin investors are extremely similar to early 16. And as we know, what happened in early 16? Early 16 was the initiation of the bull run that took place from 2016 to end of 2017. That's when we hit that 19K high, and it was just a major parabolic move. It was unbelievable. But the statistics show that a similar cycle is occurring. Let's dive in here. Specifically, 30 days before BTC's 2020 halving, which is around May, which is in about one month, the number of entities holding at least 1,000 Bitcoin in their wallet, which is just under $7 million, is now under 1,850 addresses. At the start of Q2 2016, several months before the previous halving, the number of such entities were almost exactly the same. Pretty random, or is it correlated? That is up to you to decide. And we can see this is the chart that Glassnode did put up within their report, and this is a quote from them. This trend implies that despite an uncertain market environment, whales remain confident that now is a good time to be accumulating BTC, suggesting that they believe there is further room for growth. And let's look at this chart right here. This is all the way in January of 2016, all the way here. And we see that there is a huge surge in the number of wallets that hold over 1,000 Bitcoin. Massive surge there. Back in January to July of 2016, that's when there was massive accumulation. That's when smart money comes in. And then look what happens after. When it breaks, let's say, 5K, 6K, 10K, 15K, people are selling. Smart money are selling. And this is what we're looking for, right? We're not looking to buy at the top, obviously. We're looking to buy at the lows and get the meat of the move, of the parabolic move. We don't need to catch the exact top. Yes, that would be nice. Yes, we use technical analysis to try to understand where there's going to be weakness within a structure. But at the end of the day, you don't need to catch the very top. You just need to catch the meat of the move. And from, our perspective, or at least my perspective anyways, I do agree with this. With the uncertainty in the overall market, I do agree that there is a level of risk that does have to be taken into account. But at the end of the day, the macro structure of quantitative easing, zero interest rates, unlimited money printing, and how the fixed supply of BTC characteristics resembles other safe haven assets positions Bitcoin in a particularly positive outlook for the next handful of years, in my personal belief. And that's why I'm in this space. That's why I trade cryptocurrencies, but everyone has their own view and everyone has their own bias. But that's going to be my longer term outlook, but we'll get into the shorter term kind of this upcoming month of May and discussing the BTC miners and the potential capitulation that could occur, because we have talked about this before and there are podcasts that discuss this further in detail if you would like to know more. So that is going to be the more long-term outlook, looking at the whales really accumulating Bitcoin now, which in my opinion is a really bullish sign for the long-term outlook of BTC. But at the end of the day, TA and charts are going to give me the true actionable situations that I'm going to be partaking in, basically, because fundamentals is great for larger perspective, but technicals are going to give you your actual actionable entries and exits, in my personal belief. I'm going to get the little drink of coffee and then we'll get into the last news report. But yeah, in short, I do think that dollar cost averaging is a great way if you're not super active in the markets. That's probably the best way that you're going to be able to accumulate BTC. Dollar cost averaging, for those who do not know, is going to be purchasing a certain asset at a same amount of time. So let's say every 2 weeks you're purchasing $500 of Bitcoin, or it could be $50 of Bitcoin, or it could be whatever amount of money that you choose on a regular reoccurring basis you are buying. So instead of assuming that you're buying the low, which you might not be doing because you're not really well versed in TA, or you're just unable to find the bottom, which it's not easy. Dollar cost averaging allows you to average in, so you're not potentially buying the top or bottom, and it reduces the volatility when you're entering any asset class. And especially with how volatile Bitcoin is, in my opinion, if you are not used to the volatility, it makes sense to dollar cost average to get used to the significant price swings that cryptocurrencies do have. All right, now let's go into the next topic of the day. This is going to be how miners are reacting to the BTC halving. Now, like we said before, the BTC halving is around 1 month away in May 14th or May 12th, I believe. It's not a specific day, it's an amount of blocks that are mined. But we can see right here, as the latest Bitcoin halving approaches, miners are upgrading equipment, optimizing arrangements, and conserving power and more in the race to dominate. Let's read here. How are BTC miners strategizing for the upcoming halving event, in which block rewards subsides will be cut by 50%? So if you don't know, let's actually pull it up here. Let's just do BTC halving, not charts 2020. Hopefully we can find the countdown. It should just be right here. Perfect. All right, so it's in 28 days, and it's on May 12th. So this is going to be the BTC halving. We did do a previous video on what this is. Since October, Minehen explains Bitcoin mining farms have been getting on the upgrade train and purchasing state-of-the-art ASIC machines such as the Antminer S17 and S19. Moverex says Bitcoin miners have also been looking at creative ways to cut electricity costs by leveraging surplus energy from certain city power grids. So what the most efficient miners are doing is gearing up and setting up for this 50% revenue cut that they're about to face due to the BTC halving. Every single miner knows right now they're collecting a certain amount of revenue after the BTC halving during the block reward halving actual event. The revenue gets cut in half, literally 50%. So only the most efficient miners will be able to sustain their business operations while everyone else kind of goes bust. Because at the end of the day, if people just keep on adding to the network and more people start mining, the hash rate increases, the difficulty increases, and there's going to be a squeeze. The cost to actually mine Bitcoin is going to get greater and greater with the more people competing for the same amount of the reward. There's only going to be a certain amount of BTC that gets distributed to miners on a consistent basis. There's not going to be more, and it's going to get cut in half shortly. So with more competition becomes smaller profit margins, like really any other sector. And then there's going to be a purge, and this, in my opinion, is true capitalism. It's true free markets, because there's no bailouts, there's no government saying, you know what, you did a really unprofessional job with managing your funds, you bought too much stock, you didn't save for a rainy day, we're still going to bail you out because you're a large corporation that's too big to fail. There's none of that. You see that in financial markets right now, in travel, in cruise lines, in banks, but in the cryptocurrency sector, if a huge mining operation is unable to be efficient enough to continue and weather the winter, it will go bankrupt. And you know what will happen? Another mining company will either purchase the equipment, or just, that company will go bust altogether. And then the rewards that are going to get distributed to the miners are going to the most efficient businesses that are able to sustain their operation. That is true free markets. The people who are able to create efficiency, the people who are able to hop on the upgrade train and invest back into the business is going to get the rewards, right? That is true capitalism. The best, the brightest, the most efficient, the most well-managed are able to survive, and the rest who are not managed well will die. And that is business. You can't save everyone. If you're unwilling to change, if you're unwilling to progress and become better every day, you should not be reaping the rewards like other people who are upgrading and investing back into the business, in my personal belief. All right. That is the news stories of today, and we already went over that. And now is going to go, we're going to dive right into the charts here. Gonna grab a little bit of coffee. If you did have any questions, also, we did talk about, before we forget, we did talk about the first public BTC fund, and this is the ticker symbol and the chart right here. This is QBTC.U, and we can see it's around 1226 right now, and on April 9th, it was the IPO. Hasn't really done much since, but like I said, there are management fees associated with this. But if you would like to hold an equity for exposure in the cryptocurrency market, this is an option for you. Although, in my personal views, there are more risks associated with purchasing equities compared to the actual underlying asset of Bitcoin or Ethereum or any digital asset. That's just my 2 cents. So that's going to be the news stories. Let's just close this out, and then we'll go right into the chart of BTC. All right, here. Gonna get a little bit of coffee. All right, so let's go to the daily chart, because in my opinion, it projects a pretty good view of what we could be seeing, and I do see a lot of resemblances with what happened at the bull run at the start of 2020. And then what we're seeing now. Definitely a little bit different, but in terms of the structure, I do think there are some similarities with the top that we're seeing, and we'll get into that on the 4-hour chart primarily, but let's initially talk about the market flow that we're seeing within the daily chart of Bitcoin. All right, let's get our snap. And also for anyone on TikTok, this is on YouTube as well as live. So if you want to get a higher quality, really good view of the monitor, check out the YouTube, it's better quality. All right, so we got a couple trend lines here. Let's just initially talk about the first main ones that we have. This is the anchor point. We have 1, 2, 3, 4, 5, a lot of respected zones all throughout, and then we see it was initially a resistance turned into support, and that's going to be a potential support zone. Not a very well drawn line. That's going to be a potential support zone, as we can see right here. And also just below it, this was also a support. Very well respected throughout the chart. And we can see it was a support here back in the dump in May. And then we bounced from that zone, but we do see that it was respected. So this is creating our zone of confluence for the buyers, which is going to be around 4,300, as well as the previous resistance that we saw in the consolidation of 2018 and 2019, where we saw like the massive dump, and then we just saw a slow consolidation until we saw the massive move towards the upside. And that was around $4,200. So there is a lot of confluence for the demand zone to be around 42 to around like maybe under 5K to 4,200. We do see that there's a strong level of demand there. And for my short bias, I am going to look for that to be my potential take profit zone. If it does push beyond, that's going to be something that would change our bias. But for the weekly chart in the more macro aspect of the chart, but in terms of where we're looking for take profits for our current short, I do think that around 4,300 would not be far off for the price to hit, which would then, if we do see a bottom here, which would be a really, really good validation for the support there. And in my opinion, we would go from a downtrend to now a consolidation because we have held the low and we were not able to push down below. So we'll see how it reacts to that zone. But in terms of, you know, this month and next month, I do view the market as a more bearish sentiment. Looking also at this descending zone, we see 4 rejections off this descending trend line, 1, 2, 3, 4, and then we see a 5th right here in confluence with our horizontal zone, which is around 7,700. It didn't actually hit 7,700. My long from around 69 was take profit at 77. It didn't unfortunately get hit, but that's all right. It was pretty close to it, and we're now using this zone as a level of supply, and it looks like we are respecting this zone right now. So we can see it's a pretty similar structure to what we saw in kind of the start of 2020. This is an ascending channel. We can see right here where it was pretty parallel ascending lines. Where we're currently seeing right now is a wedge where the support is more ascending than the resistance. So that is a wedge compared to a channel, but at the end of the day, they're both bearish patterns, and what we're looking for is failure to the downside, breaking the support. That's what we saw in the start of 2020 right there, kind of right before the huge move down, and that is potentially what we're seeing right now in a very similar fashion. So now that we understand the more larger perspective of the daily chart for BTC, we can now dive into the 4-hour chart, discussing the 2 structures that we see right here and how they look pretty similar in my view, and what we could be seeing for the next couple weeks here in the price action. Not much more to talk about. We did discuss mining operations with the Performante team. I don't think we'll discuss that today. So let's just dive into the 4-hour chart and look at the similarities that we have with the current price action and what we saw at the top here. So let's zoom out a little bit and just go like this. They are going to be a little bit different, obviously, but just bear with me and I'll try to explain to you how I view the markets. This is a lot of market structure that we're looking at. All right, so uptrend, basically, to very, very simply start it off. And then what we're looking for and what we saw here is failure and weakness from the bulls. Now, how do we identify that? Well, we're looking for simply breaking of supports, holding a resistance, is breaking of ascending trend lines, right? Making lower lows and lower highs. That is the weakness that we're looking for. So initially, what do we see? Well, we see a trend line that connects these zones right here. Might not be perfect, but we see this trend line connect this zone, this zone, this zone, kind of like that. And we can see a low, higher low, higher low, higher low, and then we start basing off and we're not able to make higher lows. So after those sequence of higher lows, we are unable to make a higher low. We made a higher high from this high, but we didn't make a higher low. We sustain that same low. And then what do we see next? We made a lower low, or sorry, lower high right here. This is a high, this is a lower high. And then we made a lower low. So now we're in a bit of a downtrend here because we see the shift from higher highs and higher lows to horizontal where we're unable to make that higher low. And then we see a lower high form, and then we're starting the initiation of the lower low, lower high formation for that market structure to turn bearish. Now, to break it down in support and resistance, we see a key level of resistance here turn into new support. That's great to see. What else do you see at this zone right here? I personally see a head and shoulders. We actually did discuss this head and shoulders during February, and well, I guess mainly February. Check out the previous crypto market updates. We actually did talk about this potential head and shoulders. We see a left shoulder, we see a head, and we see a right shoulder here. If you can't see it, hopefully you can see it right about now. Now, we did see this little pop off here, but you know, I could argue that this is a pullback, and then we got our major move to the downside. But this head and shoulders was pretty well respected all around. So we can see there's weakness from the ascending zone breaking. There's a weakness from the reversal of the head and shoulders. And once you see a break, making a clear lower low, you're looking for that lower high formation. You could probably draw a trend line here to make that nice zone into a key level of supply. So that's discussing the weakness and the reversal we saw in start of 2020 basically. What do we see right now? Well, initially, I see a resistance turn into a nice level of support. So initially, that's great. Exactly what we saw here. Resistance turning into support. Very, very similar structure in that regard, but that's not all, right? Now, what do we see? Well, in my view, this kind of looks like a head and shoulders. We talked about that within the Performante team. We saw a left shoulder right here, a head, and now we're seeing the right shoulder come into fruition. As long as we're holding below around $7,000, $7,100 around, then the head and shoulders formation is coming into fruition in my personal view, which means that the left shoulder right here, the head's above here, and the right shoulder has already taken place. We could see the lower high because this was the right shoulder right here. This was the right shoulder right here within the head and shoulders pattern, but we did see a little bump up forming a smaller right shoulder. Now, what do we see right here? We see a very, very similar structure where we see that right shoulder get another bump right here. Because this was the right shoulder. But we're seeing the lower low, like we saw in this price action pattern. This was the right shoulder, but then we saw a not really lower low, but we saw that second right shoulder come into fruition, but it was lower than the previous right shoulder, indicating that the market structure is bearish. We're getting a little pull-up or a push to the upside right now, an exhaustion move to the upside. In my view, this, hopefully, because I'm short, will be the lower high formation, and we can just draw a trend line down here, creating a descending triangle formation, and then we'll get the failure breaking the $6,800 level of support. Once that comes into play, I think we'll get a lot of stop losses hit because basically everyone from the start of April almost who's long will now be in the red, which is obviously very bearish. A lot of confidence will be lost from the bulls, and I think that will be a really good indication for us to have a confirmation of our short opportunity. So then basically what we're looking for is that similar pullback, we just do a nice little wedge, nice little ascending channel, and then probably get some confluence with a horizontal level of support or resistance to get that nice entry for our short add-on, basically. But that's the structure that we see in the market. To put it very shortly, we see a descending triangle here, which is also a head and shoulders pattern, which is the left head, right shoulder, and if it does break the 68, which I do expect to do, we're looking for some level of pullback. Might not be perfectly at the retest, but we are looking for an ascending zone, maybe a wedge, maybe an ascending channel in confluence with a horizontal level of support and resistance. Once that does fail, I do think that we're going to make that next low. Hopefully, it would really be ideal if we did consolidate for a little bit longer. Like we can see right here, after the move down, we consolidated for a good 10 days before we got that next leg down. So if we're able to do something like that, that would be, in my opinion, a good thing, because I think the next leg down will be in confluence with the BTC halving, because that is going to be where a lot of miners are going to capitulate, because their revenues are cut in half and they weren't doing the upgrades. They weren't going on the upgrade train, hopping on the upgrade train to try to create more efficiency within their operation. If they're just maintaining their current machines and not upgrading, they will die, because everyone else around them is upgrading. When everyone else gets more efficient and it costs less for them to actually produce and mine Bitcoin, the person who's left behind will go bust and they'll go bankrupt. And that's miner capitulation, and then the reward gets opened up and it frees up more BTC for the people who did put in that extra investment to create more efficiency. So then it funnels the capital to the most efficient miners in the network. It's kind of a free market funnel that puts money to companies that invest in their infrastructure, invest in their efficiency, invest in the progression of their business, rather than glut companies that just pay for share price appreciation to get themselves rich. Not a good plan. So now let's look at the 1 hour chart here. Thank you for sharing, Rocket. Let's continue on here. Also, for anyone who has any questions involving what we talked about, definitely put them in the questions for YouTube and TikTok. I'll be happy to answer them. All right, now let's look at the 1 hour chart for Bitcoin. We already talked about the 4 hour, which is the main structure that we are basing our decisions off of, really. Well, the daily and 4 hour is going to be the main market structure, but the 1 hour is going to be kind of pinpointing quality areas of entry. In my personal view, some people trade the 1 minute chart, and hey, that is their view. But in my view, I really think that with this current time, there's a lot of volatility, there's a lot of noise, and being patient and waiting for the major market structures is, for me, the best way to go about doing things, because lowering the amount of trades you take, yes, you might not get the rewards that you're looking for, you might miss some trades, I missed some trades, I missed the link trade that I was looking out for, but at the end of the day, with this volatility, you only need a few really good trades a month to basically make your month. So I'm going to try to scope out those trades, basically. So yeah, let's go to the 1 hour chart. We've already discussed the structure of the market, but let's just discuss it a little bit further in greater detail on the 1 hour chart. We see the anchor point of this descending zone right here. We see 1, 2, 3, 4, 5 rejections, really validating this zone. This one especially was in confluence with the ascending zone, so that was a pretty high probability situation. I entered right here because of the break, and then we retested once, twice, 3 times, and then we got that bearish engulfing candle. I personally thought that was a pretty good entry, but we did get a move all the way back up to test that resistance zone, and then that formed our head and shoulders right shoulder pattern. I actually held through this entire little bull push and did not sell. Stop losses did not get hit. I was pretty confident. I had conviction in my short. I gave it room for it to breathe, and it rewarded me for my patience. pushed it all the way down, and now I'm basically break even with a stop loss at this zone, and then the final stop loss here, but my initial one is going to be around 7,200 to take me out for a decent amount of my position. And like, because if it does break here, the head and shoulders is now broken. The structure that I was looking for that mimicked the initial breakdown from 10K has also broken. So too many invalidations for me to look long, so I'm going to get taken out, and then I'll look for re-entries if I see anything. But if I am not seeing the high quality setup that I initially entered for, I'll get out of the trade, and that's why stop losses are there for a reason. So basically, I'm just waiting for the price to break out of this major descending triangle pattern. I don't mind if the price continues up. I do have a minor level of resistance sitting around 6,900, and that would be nice if the price held below that zone. We can see it was a key level of both support and resistance throughout the entire chart, basically. So we can see it's a pretty valid level for the price to potentially hold. And like we said before, this is a lower high from this high. This is a high, this is a lower high, and this could be a lower high, which is a pretty bearish market structure. And then what we're looking for is once we see that lower low form, we did see that lower low initially from 68-ish, where this was that previous low. We actually made a lower low, so we're already seeing that bearish market structure come into play here, where we're seeing a series of lower lows and lower highs. So in my view, the market structure is bearish, the price action indicates bearish. We broke an ascending zone, holding a descending zone, creating a descending triangle, which is more bearish. And also the VSA, we see a lot more sell pressure or sell volume coming into the market than buy volume on the larger time frames. So definitely looks more bearish overall, but keeping in mind, this is all just the smaller time frames, more just talking about like a monthly basis. When we are talking about the larger time frames, I am still pretty bullish. And this is that major symmetrical triangle that we've been talking about for weeks and weeks on the weekly chart. And we can see that the drop here would basically get us back to our key level of demand, which would be anchor point 1, 2 back in 2018, and then we see it reject when we had that initial dump to the downside. So that's why I'm looking to see if I can take profits basically at the lows here, because if it does hold, that would create an extremely bullish opportunity for us, because this price action pattern is, in my opinion, a huge possible setup for one of the biggest bull runs that we've ever had, not even in just cryptocurrencies, but in basically almost any asset class, I'd say. If the global macro outlook comes into fruition, where global investors are going out of fiat currencies due to inflation, we currently see a lot of people flooding into the US dollar because it's a safe haven in the short term, because we're not seeing inflation. CPI numbers are actually negative, meaning there's actual deflation in the market, even with all this QE. So right now, it is a safe haven asset. Look at Bitcoin, it's super volatile. Look at gold and silver, they are up, and gold did break the $1,700 level, which is super significant, but at the end of the day, they did see a huge correction down. So right now it does look like the US dollar is a safe haven, but when the central banks continue to print money, continue to overreact, they've already said that they will overreact. Look at 2008. They got rewarded for bad behavior, in my personal opinion. They got rewarded the longest bull market in history for the artificially low interest rates and massive quantitative easing measures that inflated the stock market, and they're going to continue to do that because it worked in 2008. They said, wow, that worked extremely well. And now they're creating, ideas of modern monetary theory, and the idea that if you just buy back your own debt, it's just a debt loop and you can sustain that for decades. And their idea is, look at Japan, they've been doing it for decades, so we can do it for decades and it shouldn't cause any problem. This idea that inflation will not occur is going to cause inflation, in my personal view. It's a funny thing that people always think that they are better than previous economies, but any fiat currency has gone to zero inevitably. It's a fact. So if inflation does cause a worry, I do think that Bitcoin, because it's basically better in every way in terms of the new age of how to actually store and use wealth. You know, if you want to use gold, you're going to melt it down. If you want to buy a new car, how are you going to get change? If you want to buy a slice of bread, how are you going to get change if you have 1 ounce of gold? It's going to be a lot of work. It's not sustainable unless you have a blockchain-based digital currency that is backed by gold, 1 for 1. Then that system could definitely work. But just actually physically carrying gold around, I don't think would be a sustainable way to basically use any sort of money. That's just my 2 cents. So that's more talking about the longer term outlook of BTC. Obviously, that's a huge speculation, but it's the best asset it's the best performing asset of the last decade. In terms of the global macro, Bitcoin's basically set up for this specific role almost. Other than COVID, this is really its intended use, really, for it to shine when central banks are printing shit tons of money, and there is a worry for inflation. This is when Bitcoin is made to either make it, or it's just not going to be able to get adoption, get investor confidence to actually become a safe haven asset. But it's still super early in the process. All right, that is going to be the BTC analysis. Hopefully you got some good entertainment value, something that is able to provide you a little bit more of a reason why we think we're looking for shorts. All right, now let's look at the altcoins here. First thing we're going to look at is going to be Ethereum. Let's jump right to the 4-hour chart and discuss what we're able to see. I think I'll get rid, I'll probably get rid of this stuff because we don't really need it too much. So what do we see on the 4-hour chart? So in my view, it is looking bearish, but entry now would be pretty premature. Let's just discuss the market structure that I personally see right now. Very, very clear ascending zone. We have an anchor point here. We have 1, 2, 3. I don't really classify that. 3 very significant rejections. We can even classify that. 4 very significant rejections to the upside, showing that this ascending zone is a strong level of support. Now, we even see another one right here if we really want to get nitty gritty. What do we see after? We see a major break in that zone. So this to me is a significant break of an ascending zone, potentially shifting the bias from an uptrend, which we were seeing before, to a consolidation, which in my opinion proved to be exactly what it's doing right now. It wasn't an uptrend, seeing clear higher highs and higher lows. Now we are in a consolidation similar to Bitcoin, seeing a descending triangle pattern. We see an anchor point. We see 1, 2, 3 rejections, 4 rejections, creating a descending trend line. And we also see a horizontal zone at $150 act as a key level of demand. Now we're seeing a descending triangle pattern, and we're retesting this ascending zone yet again for a resistance zone. So let's actually zoom in here and discuss what's happening kind of right now, because that is important. So on Ethereum, our bias of Bitcoin will project onto the other alts because they will move in tandem. They're very correlated. Bitcoin, Ethereum, XRP, all of these alts are very correlated. They'll move in similar directions. And we can see right now, I'm just going to get a little bit of water. Okay, this is that previous support that we saw for that major zone. This previous support is now getting tested as a new level of resistance. And it's multiple times that we're holding, so it's good to see. And this is creating our resistance, and we also see a support here. And in my view, this is also squeezing the price closer to the apex of this wedge. And we can see that right here. Higher low, higher low, higher low. Just connect the higher lows, and you can see it's not perfect, but there is a wedge that is forming here. And all we're waiting for for an entry, in my view, is going to be some pattern here, some indication that there's strong sell pressure. A bearish engulfing candle on the 4-hour would really do the trick. The 1-hour would be beneficial, but the 4-hour would really validate it. For example, right here, I know it seems like a large stop loss, but this was a good bearish engulfing candle, very significant. The previous candle open was here, and it dumped all the way, basically double the size of the previous bullish candle. So if you do put an entry here and your stop loss above right here, if you do have that same thing happen, you could put that stop loss there yet again. You also have a confluence of this descending trend line connecting the lower highs. So you have lower highs pushing the price lower and lower, and a horizontal zone. So in terms of the probabilities, all you're looking for is a break in the support, and then you're not home free, but the probability of you profiting off of that trade is now very high. And if you wanted to be more conservative, you could patiently wait, not enter within this zone because it hasn't broken the market structure lows. You would have to wait until it breaks 152, and you want to enter on their retest at 152 before you enter for a short. That would be the highest probability trade with the most confidence in my view. More aggressive entries would be at the highs here around 160, 159, because like I said before, it is going to be the wedge that we're forming, and I think we could see another dump down. And XRP did this exact thing. We'll actually look at XRP next, and it actually already broke out of that situation. Now let's look at XRP. Let's go to the 4-hour, and let's discuss exactly what happened. So let's just take it back a little bit here. We saw an ascending wedge with a blow off top. We talked about that within the Discord yesterday. And then what do we see right here? We see this ascending zone that was a key level of support, testing and holding the price action multiple times. Oops, that's not the one I'm looking for. Let's get our arrow. So there's our anchor point. 1 rejection, 2 rejection, 3, 4, 5 rejection. Strong level of support. Same as Ethereum, strong level of support, turning into a new minor level of resistance. XRP, strong level of support. Let's get our snip. Turned into new level of resistance. We can see strong level of support, support, turned into resistance, and we can see it was an ascending channel, but we can see that the previous support turned into the resistance. This is what I'm mainly looking for. And then we got a high or a low, higher low, higher low. And then once we got this major bearish engulfing candle right here, it was a huge drop. And that, in my opinion, is what we're looking for Ethereum. Now, I did enter on XRP actually. I entered right here. At the pullback after the validation of this zone, and then we got that 4-hour to close to the downside. That was my entry signal for a short. We did hold up here, and then we consolidated, and once we created this high, my stop loss was just above there, and I got stopped out. So I still am in my Bitcoin trade, but I got stopped out of my XRP trade. Now, does that make me get worried? I have to change my bias because I got stopped out? No, that happens. If your risk reward is on point, you shouldn't get upset about one loss, because if you're looking at the potential risk reward of this trade, we're looking at some potential huge gains to the downside. So taking a small L with an entry here and a stop loss here, in my opinion, is not that bad of an L to take. As a trader, you have to take small losses and accept them. If you can't take small losses, you will inevitably have one major loss that will wipe out many winners. And that's not what you want. You want to have a lot of small losses that you're able to accept, and a decent amount of winners that you're profitable, and then you're going to have a few huge winners that are really going to take that portfolio up a notch, and that is not something that you should be expecting. But trailing stop losses, waiting for a major pullback, it can really benefit you. after hitting some take profits. But yeah, you should not be taking massive losses in my view. You should only be taking managed, well-managed losses that you know how much you're losing. You should never take a loss and you're like, how did that happen? In my view, you know, stop losses are there for a reason. Some people don't use them. I personally use them every single time I enter. So yeah, basically on XRP, very, very similar structure, descending zone, horizontal zone of demand, and we're just going deeper into the descending triangle. But in my view, XRP has already went past where we're wanting to kind of enter for our second trade, which would be at the high right here. Right, that is that zone that we're wanting to enter for Ethereum. Ethereum hasn't hit it yet, so we've broken major support. Now testing is minor resistance, and we're looking for a bearish engulfing candle. On Ethereum, we're now, let's go to the 1 hour chart, testing previous major support, new resistance, and now we're just squeezing towards this wedge right here. Let's get that green. And that's basically going to be my trade. I'm looking for a major bearish engulfing candle for me to look for sell pressure to enter the market so I can enter. So we can see right here, I don't mind it continuing a little bit further here, but once we start to see that sell pressure come in, I think it'll look very similar to XRP, where we're going to get a massive push to the downside. Yes, we might hold around $152 because it's going to create that descending triangle to form the push to the downside. But if our stop loss is above the recent high there, our risk reward is going to look absolutely phenomenal if it does actually go our intended direction, because, you know, our take profits, let's say, are 20%, it could go 30%, and if we're risking 3%, our risk rewards like 7 to 1, 10 to 1. These are the types of risk rewards we're looking for. And that's, like I said, if we're going to take 1 loss, 2 loss, I don't mind at all, because the risk reward is unbelievable here. And like, I don't know if we're going to go all the way to 86, but I think 124, very, very reasonable. $100, still in the ballpark for Ethereum. My personal view. So that's Ethereum and XRP. I think out of the two, XRP is already deeper into the descending triangle pattern, which means, you know, if we do get a pop back up to form another lower high, that might be an opportunity for people to enter short. If you are a short biased trader right now, but at the end of the day, I think Ethereum is more of an opportunity that I'd like to enter personally. Link is going to be the next trade here, or the next pair we're going to be looking at. We can see massive explosion after the squeeze, and we haven't really been seeing any lower lows coming in for Link. It's been actually holding up pretty well, forming higher lows here. Let's just jump into the 1 hour time frame. It does look like it is weakening. We're unable to hold above $3.40 around. We see there's a strong level of resistance around that zone. And if it does fail and break this ascending zone, obviously it would be more of a bearish indication, and we'd be looking for more of a opportunity for shorts. And let's just discuss the structure that we'd be looking at. So it depends on how severe the aggression is to the downside. We could be seeing a move to the downside so aggressive that we won't get a retest. The major retest zone that I see is going to be around here. We see support, support, support. We could see a nice retest at that zone, and if it passes that zone, the final area we would want to see is this zone above here. If it gets above $3.40, I think we could be seeing another push at least to $3.60 or above, because the shift in the market might be different. It might be bullish. I don't have a crystal ball, but as long as we're staying below this major level of supply, I am looking for more of a sell bias. Although, in my opinion, Ethereum does look better. But if it does provide me with a good opportunity, it doesn't hurt to have options in the market. And that's going to be the major market structure zone that we need to break. And if we get a retest at $3.30 and hold it, and if we see the overall market start to shift to the downside as well, in my opinion, that'd be a decent opportunity here. And then if we do see some major sell pressure coming into the market, this ascending zone would be the next level for the confidence from the bulls to take place. If it breaks that, we would need to, or we would basically probably be looking for more short side opportunities. So that's going to be Chainlink. EOS is a very similar market structure. We see a descending zone breaking the ascending trend line. Very similar structure to Ethereum and Bitcoin. We've already talked about it, so I'm sure you're well aware of how we're going to trade this. And BNB is a little bit different than the rest here. We're seeing a decent amount of buy pressure coming into the market. I did see this symmetrical triangle come in, and we still haven't broken this ascending zone to the upside yet on the 4-hour. But the fact that we've broken the high does signify that there is a lot of strength coming into BNB. And it might be the fact that BNB is seeing a lot of acquisitions of the 400 million for coin market cap, and there's a lot of bullish news overall for just the size and sure speed at which Binance is kind of taking over the whole exchange market. They're the largest trading platform in terms of the volume in the cryptocurrency space, and I don't know if they're in the most amount of countries, but they're in a lot of countries. They're really the largest trading platform available, and they have futures options, margin trading, and it's a great platform. In my opinion, it's the best platform to use. And BNB, their token is going to be kind of like purchasing equity, because they're burning excess tokens, which kind of caps the supply. So then the coin will appreciate as time goes on, as more adoption gets used, as more people buy and sell it. So yeah, I think BNB is a great opportunity, but in terms of the price action, it is a little bit less ideal for shorts. It actually looks more like a long opportunity because it broke the major $15 resistance zone. But you know, with my view of the markets, I'm not really looking for longs. I'd rather patiently wait for the short opportunity that I think could come into fruition. So that is my view of the markets. Major alts we're looking at is Ethereum. XRP looks all right. Link looks all right. But I think Ethereum is, in my opinion, the best opportunity because we looked at XRP and how that played out and what we could be seeing, and we have a really good template to how to enter Ethereum. So that's going to be my overall view of the crypto market update. We really hope you enjoyed it. I will be going over all the questions on YouTube and TikTok, but this will be the completion of the recording, which we'll post on YouTube. So thank you very much for watching, everyone. If you found this useful, and if you're watching it on YouTube, please hit the subscribe button. It does help us a lot. And if you're interested in discussing more things relating to crypto trading, finance, entrepreneurialism, kind of anything regarding that, definitely check out our Discord. It's free to join. We have over, I think, 1,600 for sure members. I don't know if we hit that 1,700 number yet, but we're nearing 2K, which is super exciting. We'll probably do a giveaway for 2K for a lifetime of Performante Premium, so check that out if you are interested. And yeah, we're very welcoming for any real skill set, from basic novice, don't really have an understanding of what the markets are, to a person who's able to profit on a consistently basis. So definitely check that out if you're interested, and hopefully you enjoyed the video. Until next time, have a good one.